Hello traders, welcome to my video on the Twiggs Money Flow Indicator. Okay, in this video I'm going to show you a strategy that you can use to help capture moves such as this one. Okay, for hundreds of pips. So I'm using the MT4 trading platform. I've got the Twiggs Money Flow Indicator displayed here below my chart. This is actually the Twiggs Money Flow on Zurich indicator, so it just adds an extra element to it. However, you can apply the strategy just with the Twiggs Money Flow indicator as it is. So this is a US dollar, Japanese yen 1 hour chart. You can use this strategy on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc. and any chart time frame. I like to trade the longer term charts simply because they contain more price data and therefore I find the signals tend to be more reliable. Okay, so the first thing we do is we look for the trend. As you can see, we had this big breakout to the downside. Could have been a trade in itself. And then following on from there, the market is making these lower highs. Okay, so we can establish we are in a downtrend. Okay, once we've established that, we can go over to the Twiggs Money Flow Indicator. And basically when it's green or high up, it means that there's a strong market or a buying market. And when it's red or going down, it means that there's a weak market or a selling market. Okay, so we're going to use that to help us time our trades. So the first thing we do is once we've confirmed the trend, okay, as you can see here, weak market is selling, it's red. You wait for it to turn green, okay, in the opposite direction basically. So once this turns green, okay, the money flow increases. If you're using the standard Twiggs Money Flow indicator, you just want it to increase in value. And once it's done that, it means that there's a pullback, okay? So when we know that there's a pullback, that's when we're going to look for placing our entry, okay? And then we can simply draw our support, draw in the pullback, and then enter on a breakout of support. As you can see there, this would have been a good breakout trade to get us into this trend. Okay, we could have placed the stop loss just above this recent high, okay, which is a relatively tight stop loss for the 1 hour chart time frame, and use a trailing stop on the way down, just moving the stop loss above the highs all the way down to lock in the trade as much as possible. You can of course close part of the position on the way down to banks and pips. What we don't want to do is just exit prematurely too early and just leave too much on the table. Okay, that way it can make it difficult to have a long-term favorable risk to reward ratio. We want to cut losing trades short and let winning trades run. That's what works for me. You obviously trade how you want. But I think money management is the most important aspect, one of them, along with good discipline. Okay, so you don't want negative emotions, fear, anger, and greed to cloud your decision making. Don't revenge trade, fear of missing out trades, force trades that aren't there. Okay, you can have the best entry in the world, but if you've got poor money management and trade discipline, it's not going to be a sustainable strategy. Okay, so go back to the money flow. You want it again. We know we're in a downtrend. You can see this level of support when it was breached actually held up really well as resistance over here. Okay, so it just emphasizes the strength of that particular level. Okay, you also have this as a descending channel as well. And a nice breakout trade. So again, when the indicator goes up in the opposite direction is when we can start drawing our support. So perhaps we'd be drawing it like this. You don't always have to draw it completely horizontal. Okay, you can see this support line holds up well, and we have a breakout, becomes resistance. Market again is making these lower highs. Okay, and we could have been in this breakout here if not before. Okay, you can of course just draw your support like this. Zoom in for you there. Okay, that's clear support. As I said, 1 hour chart, so we know there's plenty of price included within these candlesticks. And again, this support holds up really well. No coincidence. Big breakout, support becomes resistance, and you can get a nice continuation of the trend there. So Twiggs Money Flow was green increasing. That's when we look to time our entry on a breakout of support. How you draw your support is up to you. It's pretty obvious. Keep practicing, you'll eventually eventually get there. Okay, of course, demo trade until you start seeing good results. Again, same thing happens. So it goes green, increases, market gets stronger. So what we do in that instance, we look to see if there's going to be a breakout, and there is over here. Okay, and we can continue. We know that the market is still making these. We can in fact just extend this one out. Still making these lower highs. We're still in this downtrend. Okay, wait for a pullback. The indicator shows us that, and then we can trade on a breakout of the pullback and get into this trend at another nice entry point. Okay, another one here goes in green opposite direction. So what do? We draw our support. No coincidence. Support, M chart pattern there. Support becomes resistance here, and you're in again. Okay, obviously you don't want to sell too low. Okay, you know, you had this big move down, ample opportunity to enter. We don't want to really wait until prices down here. And you can, some traders, more aggressive traders, just enter as soon as the money flow indicator changes color. Okay, without waiting for the support level. Okay, so on this example here, when it changes to red, could have sold here. Okay, but as you can see, the price did continue moving up, which is why I like to wait for it to breach support. But then there'll be other instances like here, when it changes color, you'd get in earlier. Okay, rather than waiting for the break of support here, you could be in here. But in saying that, if we hone in on this point, you may have been looking at that level of support anyway. Okay, you've got a nice M pattern breakout to the downside there as well. Okay, so it's as simple as that really. Make sure you've got good money management. In the uptrend, you just do the opposite. Okay, so you can see the market level of support, higher lows, we're in an uptrend, and then we're just going to look for pullbacks. So for example here, okay, you see it goes red. When it's red, then we can just look to draw resistance. That's quite a strong resistance, goes all the way back there, and a breakout, and we're into that trend. A nice point, hundreds of pips. Profit potential, stop loss, we just place below the low here, and then trail the price as much as possible to maximize this move. Don't exit too early. If you do exit early, you can look again for another opportunity. So wait for it to turn red, opposite direction. When it does, you can just draw your level of resistance. Breakout trade, no coincidence, big breakout candles here, and you can get in again. Okay, same on the way up. Just wait for the pullback. Spot by the indicator there. There was actually one here as well. Okay, you would have needed a good money management there. May have been taken out, break even, but again, you can get in after. Just keep in mind that you don't want to end up buying at the high, so we may not be buying that high, especially when you can see that the Twiggs Money Flow is making bearish divergence, suggesting a move to the downside is approaching. Okay, so keep an eye out for that as well. Okay, earlier we did have this bullish divergence whilst it was moving up, but then as things start to slow down, you can see this bearish divergence, so that can help keep you out of trouble. And obviously it's falling in value as well, which shows that the price is weakening. Okay, so the lower it is, the better when you're trying to buy. As it gets higher, it can mean that, you know, the market may be overbought, so just go careful with that as well, just as the market can be oversold when it's too low. Okay, it's a simple strategy. Hopefully you found something useful in this video. Please like and subscribe, and I hope to catch you on the next one. Take care.